So, senior correspondent here for Kevin Green, senior markets correspondent here on Schwab Network. So, good morning, Kevin Green. I was really just so thinking about this 433 level and what Jay Powell may say on Wednesday. I mean, I think it's going to be, the last time he spoke, he hit the markets pretty hard. But let's just start off with the big picture. The fact that last week the S&P gained 3%, almost 3%, and the NASDAQ up over 3%. It was a good week. Now what?
It was a good week, and now you want to be able to see a little bit of a continuation. Now, it's out of the norm that we do see 9 straight days of gains here, Nicole, so rightfully so. We might be seeing a little bit of a pullback in the market, but I would say if you're a bull in this market right now, if you want to just be able to hold the 55.75 level in the S&P 500 for this week, that's pretty much matching with the 50-day moving average, which we actually did overcome last week on Thursday of last week here. So seeing a little bit of a pullback, but hitting that 5,600 level or getting close to that 50-day moving average and bouncing higher, I think would be a win for the bulls this week. And if we are actually able to continue this movement to the upside for this week, I would look at the 5,700 level as your first area of resistance, then that 200-day moving average, which is sitting pretty much at 57.50. And then you could also look at this upper end of this channel here. Now, this would be actually a really big breakout. If we're able to break above 5,800 here today, you can make the case that, all-time highs could be in the cards here over the next couple of months, just given the amount of momentum, the market breadth expanding, as well as some of these tariff policies maybe being pulled back here. I'm not gonna say that we're all clear yet, though. There could be a risk of a pullback just because we haven't really made a new high compared to these pullbacks or these waves and pullbacks here. So once again, that wave or that achievement would be sitting at around 57.75 here. We do have MACD actually in a bullish formation here. 12 EMA is above the zero line, waiting for that 26 EMA to do the same here on the daily chart. And overall, once again, this is actually looking pretty good. If we're actually looking at the intraday levels, though, 5630 is going to be a key area for us to be able to hold as an area of support. We're trading at around 11 points higher than that for right now here, but you would like to see the market kind of come down, maybe test that, get some buyers to step in and resume this uptrend. Any fundamental break of that 5630, we have a pretty wide range to the downside that we could see. Now, obviously, these ranges are going to be based on options flows as well as where volatility is. So as we have higher volatility or heightened in volatility, which 24, 25 VIX is still elevated on a historical basis, the ranges that we kind of see on a day-by-day basis still widen out. So if we have any material break to the downside, looking at 5540, which is once again a considerable amount away from here for right now, but that could be the area of support. And then once again, 5700 as an area of resistance for today's session. So everything looks pretty decent. If you're looking at the last couple of weeks here, we just want to see continuation or even a consolidation, and then a break higher would be once again a win for the bulls in this market.
Yeah, understood. I know you're going to be taking a look more at S&P. I will say we often talk about market breadth. Every single sector is lower today. And, down volume exceeding up volume, obviously, when you have all down arrows like this. It's not terrible, but every single sector lower. So tell me a little bit more here. I know you're looking at the futures.
Yeah, if you're looking at the E-mini S&P 500, the reason why I like to look at this is because you actually have the overnight price action, and then there's also a volume component. We can have something called an anchored volume weighted average price on the E-mini S&P futures here. And what was actually a huge win for us for the last couple of weeks here, if you're a bull, you were able to hold the October lows at anchored volume weighted average price, those October lows. We were able to hold that. That major white trend line that we've seen from the lows here has also held up. But we also broke above the volume weighted average price, the anchored volume weighted average price of the highs. And that was a key area that we were focusing on last week. Now, if we come back and retest it again, which is sitting at around 56.22 on the E-mini S&P futures, that's okay. You want to come back, retest, and then break higher here. What you do not want to do is see a failure below that level and coming back and testing the October 2023 moving average. Now, also for the bulls here, you have the CCI, and the CCI is basically measuring price action compared to the 14-day moving average here. And it's just trying to see kind of like an oscillator, right? We have a zero line that's sitting at that yellow line here. That's the first indicator on the bottom. And we're about to break through that zero line. And it looks like we want to break through that. if that does occur, Nicole, usually we see actually fairly strong follow through, around a 4%, 5% move to the upside if you're comparing the last 3 years, looking at that weekly chart. So that's bullish. And then the MACD is also hinging on the weekly. So we're setting up to actually have some pretty decent crosses here to the upside for the E-mini S&P futures. Price action just has to be able to confirm that for now. And for the bears, what I will kind of call out, you have the FOMC meeting this week. Did we hear some hawkish commentary coming from the Fed? That could be the case. We are not getting a dot plot this time around here, but the commentary will be key. And do we actually see some water being poured on the bulls here in this market to have a little bit of a pullback? So FOMC meeting, definitely going to be the vol event to keep on the radar for this week.
Yeah, and we had some escalation of events in the Middle East. Oil continues to be a story, but in this case, it's to the downside on the heels of OPEC Plus and boosting production, right? That has pushed oil lower. That's what you're watching.
Yeah, there's two different dynamics that are happening for oil. So if we're looking at the 15-year monthly, oil has been moving to the downside because of one, economic slowing being priced in to the market. You can see that across many commodities, but also this increase in production by OPEC Plus. Now, the increase in production is actually very interesting. There's several different ways that you can look at it. One, we actually had 2 countries, Iran and Kazakhstan, that continue to overproduce for the last year and a half, almost 2 years. So OPEC Plus is basically looking at that and saying, well, hey, if you're going to overproduce, we are going to also overproduce as well to take some of that market share away. So more barrels hitting the market with a lack of supply potentially here, or a lack of demand. You could see prices continuing to move to the downside. That $65 level was a key area. Once you break $50, you're starting to eat into a lot of the mid cap and small cap Permian companies out there when it comes to shale. And you could actually see a pretty rapid reduction in the amount of wells out there. And then that also can have an impact when it comes to the labor market just as a whole. But what also is very interesting, that anchored volume weighted average price, once again, if we take that from the lows, remember when oil went negative, if you take that from the lows, where we actually had around $6.50, if you looked at the active contract at that time back in 2020 here, we're actually below that moving average. And that's not a good sign at all, Nicole. That could continue to, you could continue to see oil moving to the downside. Good for consumers in some respects, but there's a whipsaw effect that could also happen, right? A slingshot effect if we have too much of a constraint in production. Once we do get economic clarity and certainty here, you can see prices rising. Last thing I want to highlight here, crude oil prices going down, but if you look at the BWET or the BWET ETF, which tracks oil tanker rates, this is from Amplify here, you are actually seeing tanker rates move to the upside while crude is moving lower. And that is because these tankers are now going to be used not only just for transportation, but also for storage. And that's something we also saw back in 2013, 2014. Seems like that's going to be the similar reaction. BWET is up over 8% since the 21st of April. And crude oil is down about 11 to 12% at that same time period. So that's an interesting divergence that you are seeing. So the tanker companies are actually making more money right now because of this environment rather than prices moving higher. So very interesting development there.
It makes sense. They got to put that oil somewhere when you don't have the demand for it. I'm glad you brought us that actual, fact, because a lot of people aren't focusing on that exactly. Thank you so much, Kevin Green. Great to see you. Good analysis of the market on this Monday morning.